Hello, this is Mike Swanson of Wall Street Window. What are the Magnificent Seven stocks and why are they so important now for the financial markets? You're hearing them being touted and talked about nonstop. I'm going to look at them individually and chart them out and talk about why they are now truly the most important stocks in the market. Discussed all this this morning, actually, in an article I just released a couple hours ago in my weekly report. Now, if you're not getting these reports, go into the description in the video, scroll down, and you'll see a link to opt in to my free email list. It's all completely free. I don't ask you to pay for anything. It's all free, and you'll get these free weekly reports. So anyway, when we look at the S&P 500, it's been going up this year since January. We did get a little bit of a pause. And in fact, if you can remember, the first week of January, the market dipped and people were worried. They were saying, oh, the Federal Reserve, they may not raise interest rates fast enough. And the market may just drop. It's up so much. And what I said at that time in my report here from back then, in YouTube videos you can find, is that look, the market's overbought in terms of RSI, that's indicator on top of this chart. And in fact, was more overbought according to that indicator that's been in 3 years. However, the conditions are not conducive to a massive decline, a bull market top. Instead, overbought conditions in this situation typically get worked off with some sideways consolidation. That's what we got. And then boom, a breakout to 4,800 on the S&P 500. And now Friday, we just closed at above 5,000 for the very first time ever. However, we'll return to the S&P 500 in a few moments because what is going on is that most of the stocks actually inside the S&P 500 are no longer participating in the rally. What you're looking at here is the percentage of stocks above their 200-day moving average inside the S&P 500, and more of them have gone down are below the 200-day moving average at this moment than they were at the beginning of the year. The 7 stocks being talked about on television are dominating the market averages, the S&P 500, the NASDAQ, and helping them do better. May help. These stocks are going up so much that the fact that most stocks aren't going up as well isn't impacting the S&P 500. But that's because the S&P 500 is a market cap weighted index. What that means is that the biggest stocks have the most influence on the S&P 500. In fact, 25% of the S&P 500 is made up of 6 stocks. So when on Friday, 200 stocks actually went down on the very day that the S&P 500 closed above 5,000 for the first time, you would never know that if you simply looked at the S&P 500. You'd have to look at what all the stocks are doing, and not many people are doing that, especially not on a daily basis. But the biggest stocks in the S&P 500: Microsoft, Apple, NVIDIA, Amazon, Meta, and Berkshire Hathaway. That makes up 6 stocks. Tesla is now number 11 on that list. So the 7 so-called Magnificent 7 stocks are among these top stocks that heavily influence the action S&P 500. And the fact that they're doing so well as a whole is why the average is going up, even though most stocks are not doing that great. Now, I can demonstrate this to you with this exchange traded fund that creates a equally weighted S&P 500, where every single stock in it makes up the same amount. It would be 500 stocks, 0.002% of every stock was 0.002% at S&P 500. This is what the performance of S&P 500 would look like. An ETF RSP designed to trade exactly that. And as you can see, yes, it's up, but barely up at all. And that's what the market would be doing if it was not for, well, that's what the S&P 500 would look like. So that's how important the top market cap stocks are in it. And the fact that they're, as a whole, doing so well is the most important factor now in the market performing well in this rally. It wasn't like this at the start of the rally. At the beginning of the rally in October, November, and most of December, it's very broad-based. Every stock was basically going up, but every stock got extremely oversold in October. If you recall, the market had a pullback from July to October. Many stocks, in fact, were collapsing at the October bottom. I mean, down a big percent in a 2 or 3 day period on the very bottom. So we had a huge broad-based rally, almost everything going up, and now it's changed, and only a few stocks are really doing all the bull market work. And let's look at these magnificent 7 stocks, and you're going to find out something no one's telling you on CNBC. We're going to look at all 7 stocks, and you can see Meta had a massive gap up in January when it reported earnings. This stock alone makes up 2.5% of the S&P 500. So you can see that gap up helped push up the entire average. It did the work of, you know, a lot of stocks inside of it. And NVIDIA has been on a complete tear. NVIDIA is now the most important stock in the stock market. It reminds me very much of speaking with Ike Iosif on the phone, and he's told me, hey, NVIDIA reminds me of Cisco in 1999 or 2000. Well, very few people know why Cisco was so important back then, but NVIDIA is playing that same role now and pushing up, up 3.58% on Friday, going parabolic. It consolidated with 500 of resistance, 400 support from really July to the start of this year. It broke out and it is soaring. And the indicator on the bottom of the chart I got is a relative strength indicator, ratio designed by dividing the price of NVIDIA, the price of S&P 500. When that indicator goes up, it means that stock is outperforming the S&P 500. NVIDIA is doing that. Meta is doing that. These 2 stocks are helping push up the S&P 500. So is Amazon. Amazon gapped up on earnings just the other week, made a new high on Friday. These 3 stocks are so powerful. They're doing so much in the market. So is Microsoft. Microsoft, same story, although it's not been outperforming as well as those other 3 over the past 12 months, but it is making a new high on Friday, pushing the S&P 500 up. And Google is up for the year, not doing as well as those other stocks, but still doing well, doing better. You know, it's doing good. And now, though, so we've just noticed, we just looked at 5 stocks. Really, Google is matching the performance of S&P 500. It's not really supercharging it. It's really these 4 stocks, Meta, NVIDIA, Amazon, Microsoft, that are supercharging the performance of S&P 500. Now, after Apple, you look at Tesla is down. Apple's down year to date, so it's not helping the S&P 500. Tesla is down year to date. Tesla's in trouble. The stock is broke. It's a broken stock technically because it's now trading below the 50-day, 200-day, 150-day moving averages, and those moving averages starting to curl down. It's a bad stock now. It's actually lagging the S&P 500. It's actually hurting the S&P 500. So when we stop, in one thing we can take away is when people talk about magnificent 7 stocks, look, there's really no longer 7 stocks magnificent. It's really 4 stocks magnificent, and one is a turd. That's Tesla. It sucks. Apple, just whatever. It's not doing that incredible. Do you know anyone excited about an iPhone right now? I mean, what are you going to do? Buy a new iPhone every single year? What for? When they were new, people were doing that. They're all excited. Now they're trying to come out with these crazy goggles to excite people. Whatever. I'm not buying one. I don't want to look like that. And I don't want to live like that either. So 4 stocks that are magnificent, not 7 that are magnificent. But here's the key that you got to understand. When a stock market rally is broad-based, that's great. It means you can look forward to potential upside, potential gains, especially when you come out of an extremely oversold condition for most stocks, which was the case in October, which was the case in October and November and December of 2022 at the last significant bear market bottom. This was a bottom in a correction, not within a bear market. I mean, within a bull market is what happened last year. But when a market rally narrows where only a few stocks are doing all the work, that means you're in the 9th inning of the rally. That doesn't mean it's going to end tomorrow. We don't know how long that 9th inning is going to last, but it's the 9th inning now. And it might last a couple months, couple weeks. I don't know. But when it comes to an end, we're going to see more, when people were saying, oh, the market's overbought in January, it's going to crash or have a big decline. They're wrong, because it was simply overbought in terms of the price of the averages. But now we're seeing the classic signs where when the next peak does come, we're going to see a significant pullback, maybe like we saw from July or October, or months of consolidation, sideways consolidation, instead of just 2 weeks of sideways consolidation. So that's the structure of the market. I make my decisions based on that and adapt to that. So I was personally, last year in July, I was really no longer interested in buying new stocks. I bought shipping stocks. That was the last thing I bought. Talked about that in updates. And that was like the last video I did. And I didn't do any YouTube videos until this New Year's. I did do some buying, but in November, really, late October, early November. Everything I bought then I've sold because of what I'm telling you about in this video. I sold last week, and I'm just stepping back. I'm not telling you we're going into a bear market. I'm not telling you the market's going to crash. I'm just telling you that when the current move up that, let's say, you started in October comes to an end, we are going to see a significant correction or months of sideways consolidation. Do not be shocked if the 150-day moving average, the red line on the chart, gets tested. Typically, that's what happens in bull markets. You get that average tested once or twice a year. It happened twice last year, in March and October. It'll happen again this year. So that's where we're at. I'm not going to be one of these people that just says, buy NVIDIA, buy Tesla, buy these magnificent 7 stocks. It's only 4 that are great. One's a disaster now. Look at what the charts are doing. Don't just listen to the hype that people deliver you on the internet and the financial media. And also don't listen to simple crash call fear, because this isn't enough to tell you that the market's going to crash. In fact, I'll show you how that this, maybe in a follow-up video, it's probably not interesting to people, but this type of internal divergence in the market can last for a long time without a bear market occurring. So that's the situation with the market. It's always about looking at the market structure together. And if you want my updates on my website, go into the description, subscribe, hit the like button. If you want more type of updates where we look at the market structure, if you want my next video update, hit the subscribe button on YouTube and then hit the bell next to it, and YouTube will send you an alert as soon as the next video is posted. Actually, if you hit the bell, they'll also send you the podcast I just made. That for whatever reason, YouTube only sends the podcast to the people that hit that bell. I don't quite understand why, but if you want the podcast to audio only, hit the bell, and I'll be they'll send you alerts when the next podcast is up. I mean, and I'll be talking with you later.